Oftentimes with a profit and loss, we do that once, maybe if we're lucky, twice a year. It's not a fun exercise for people that haven't done it. So what ends up happening is we sit down and we analyze it and we see where we're in alignment and where we're not. The unfortunate part about tax time is it typically comes after a very slow season. So it's an important time to do it because then we can start to see, oh, wait, here's how we did all of last year as a whole. So we can look at the harvest season too, because we have a very seasonally adjusted business. Making a lot of harsh decisions in the winter is very damaging. And then typically after we take a look at the P&L, typically things don't look so bad. Things don't look so bad because if people just start impulsively and emotionally cutting costs, they often don't. Maybe they cut some fat, that's fine. But if they start cutting muscle, now we're in trouble. We're taking big steps backwards. Or if we just start moving and going to different companies and aligning with different companies because of that emotion, we've made a choice that's very challenging to undo. It takes a lot of time to do that. And you've charted a new path. Those are steps backwards usually. It feels like it's better just because of the pain you're in, the emotion you're feeling. And is there a way to keep the way a P&L makes you feel? I know it's weird to talk about emotions and feelings when you're talking about profit and loss statements, but believe me, it's real. Because all of a sudden you look at, oh, I'm not that far off. In fact, I get clarity. Here's exactly what I need to do. And usually 9 times out of 10, it's I need to either recruit more agents as a broker or sell more real estate or lead generate more. I'm actually not that bad. There's a way to grow out of this, even though our expenses are a little bit ahead of our income. If I just did what I was supposed to do on this end of things, I'd be back to it and without cutting too much muscle. But there is a way that we can keep that mindset going throughout the year to a similar degree, because what we do is we start to learn, oh, a lot of team leaders and brokerage owners, I'm paying the agents so much and they're not doing anything. So we start cutting agents, we start doing silly things there. We might even change our commission structure when the answer might be to add more agents. And since we've got our costs fixed, economies of scale kicks in. So we want to keep our cost of sales number always in mind. How much are we paying the agents? That's how much it cost us on a sale. It's what we pay the agents, a big chunk of that. So what we do is create a monthly snapshot. It's often a part of a team dashboard. It's often a part of a brokerage dashboard so that every week we're sitting down and looking, usually being auto-populated by the administrative person on the team. So it shouldn't take a lot, or in the brokerage that's just pulling these numbers on a monthly basis. And at least at one of our monthly meetings with leadership staff, we're taking a look at these numbers. So I'm going to start with the team snapshot here. It's real simple, man. This is like a Google Sheet or Microsoft Excel worksheet, but it's just these numbers. So yeah, you can watch this and recreate this if you can remember what's on it. It's real simple, but we're going to look at how many units we did, how much volume that was. We're going to keep an idea of where our agent count's at, our gross commission income, our listing side income, our buyer side income, our referral income, how much we're getting from referrals, what are our costs of sales. And right now we can see, and a percentage based on our total GCI, which is 52.93%. So we're paying a good chunk. Hopefully, this is a large real estate team on cost of sales. What our gross profit is, what our expenses are, and we got a percentage out there to the side on that. We got 16.9% on expenses, and then we show net income. Here's our net income, and that's at 30.88%. Not too bad, right? But we have to know what these metrics should be, and that varies based upon our budget schedule and where we're at, right? And then our operator income, I want to know how much company dollars coming in, how much of that came from your own personal production, and then the total operator income. Okay? So it's real simple. But just knowing those numbers, which are lag measures, those aren't lead measures at all. Those are results-based indicators, not activity-based indicators. So we're looking in the rear view mirror. They're not so actionable, but they remind us on a regular basis where this business is going on a regular. And we're going to start to get a feel for the seasonality as we move through the winter months. You'll see those numbers, but you'll start to notice they're very different than through the harvest season in the spring and summer. And that creates a mental impact where we're always tied to our numbers because we're looking at our main percentages there. And the P&L never just goes away and then comes out. So we always know our numbers all the way through and we don't lose sight so much, and we start to get prepared for winter months a little bit better because we start to know after one time around the sun, okay, here comes those months where our production starts to go down and our expenses feel very heavy. What are we doing to capitalize our operating account so that we've got some money in the bank heading into the winter each year? Very important. Now, I've done something similar with the brokerage. Same deal, really the same numbers. I won't spend too much time on this, but a lot of similar numbers here where we're just tracking for the brokerage similar metrics so that the entire leadership team sees it. We're all talking about it. And then we'll start to see trends from year to year. And this could just be a part of your brokerage dashboard, your team dashboard. So we just pay attention to it. And we always know our percentages. We have to see those percentages go up and down according to our budget schedules, so that we know if we're in alignment and what months we typically go out of alignment. So we keep that mindset where it should be, like a business owner, not an emotional salesperson. Very important. Because I can't tell you, when I go over profit and losses with people that haven't been using a snapshot, I am dealing with a lot of anxiety, fear, deciding to switch an entire model. This isn't working. All the goals go away, all the dreams go away. And it's just, I'm going to run to safety. And that when someone doesn't know their numbers. So leaders have to know their numbers. Coaches have to know their numbers. It's very important, or that you're going to just see them jump around a lot, jumping around and just never really going anywhere on a hamster wheel. Just grass is always greener, grass is always greener, grass is always greener, grass is always greener, never knowing where their gas pedal is and how to actually increase profitability. Hope that helps, guys.